With his sixth interest rate hike in a row, the Bank of Canada governor had this message.
We are getting closer to the end of this tightening phase, but we're not there yet.
But today's move was smaller than expected, suggesting the bank is becoming more cautious as higher interest rates start to slow the economy.
If we over-tighten, the economy will slow more than is needed. That'll make life more difficult for Canadians.
The bank slashed its growth forecasts for next year and suggested the chance of recession is 50-50. Now it must keep interest rates high enough to rein in rampant inflation without causing too much economic pain. Experts say it's a difficult balancing act.
We don't want to see a severe recession. We don't want to see a severe financial crisis. And certainly the more they press ahead, the more those risks come into view.
While overall inflation has come down from 8.1% in June to 6.9% in September, that's still a long way from the bank's 2% target.
We, in fact, think that it's only by late 2023 that inflation will be at a place where they're going to be comfortable.
I got 7.
An uncomfortable scenario for mortgage holders like the Syed family.
They are keep on increasing the rates. And where it going to end, I'm like getting very worried now because it's keep on rising.
Since buying a new home in June, their variable rate payments have spiked by almost $1,000 a month. And that's had a big impact on their budget.
We were thinking for vacation. We were also thinking for buying new car. And now I'm thinking, I don't know. It's really unpredictable.
That, however, is what the rate hikes are meant to do. As consumers slow their spending, those businesses will see less demand and lower prices, bringing down the inflation that's been too high for too long.
So, Nisha, there are a lot of people on Bay Street where you are and at home wondering where on earth the rates go from here.
It doesn't sound like the Bank of Canada is ready to hit pause just yet, though going forward it may not be as aggressive as it has been in recent months. Economists are still predicting another rate hike of between 25 and 50 basis points when the Bank of Canada meets in December. But beyond that, Adrienne, much will depend on how inflation responds and how the economy reacts.
And we have no idea what will happen. Nisha Patel in Toronto, thank you. So let's bring in senior business correspondent Peter Armstrong. So, Peter, we just heard that family in Nisha's story talk about, this enormous financial pressure they're already under. So I can imagine there are a lot of people saying, why not just stop raising the rates right now?
It's a good question because that pain is very real and it's very legitimate. The Bank of Canada is really, Adrienne, just weighing risk. And there's an awful lot of risk going around right now. And we saw the risk in Nisha's piece. If they act now, they could push the economy into a recession. Maybe mild, maybe short-lived, but it'll be painful. And, jobs will be lost and businesses will suffer. But there's risks in doing nothing as well, that if they just hit the pause button here and said, let's just wait and see 4 months and see, maybe inflation rates will continue to come down without higher interest rates. And maybe that'll work. But if it doesn't, what do you do then? The path the Bank of Canada would have to take would be way more aggressive, and the impact on the Canadian economy would be way more painful than the path they chose today.
And so, aside from acting, which was the most important thing, the Bank of Canada governor kind of had a lot to say today.
He did. And, it was funny. This sounds crazy, but I watched that news conference today and I really thought to myself, we're seeing progress. It doesn't feel like it, but we are. We've seen inflation rates fall from 8.1% at the peak down to 6.9%. The response, too, is moderating. Remember, we were looking at massive interest rate hikes, 1 full point, 100 basis points, down to 0.75%, down now to 0.5%, and we expect that to moderate further. We're winning this fight, and they now expect we're going to be able to get inflation rates back down to 2023, by the end of 2023. That's good news. The bad news is, for anybody who's suffering and trying to put their bills together today and is already struggling to do that, the end of 2023, that's a long way off.
Very long way. Peter Armstrong, thank you.
You bet.